Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for a very wild trading week, at least in my opinion. Today is Thursday, the 5th of January, 2023, just after 6:40 p.m. Central Time. Now, first, this has been a short week. You know that. Number two, it's Labor Week. By Labor Week, I mean it's a week full of labor reports. Yesterday, we had the JOLTS report. You saw that there were more offers for jobs than the market thought. That took the market by surprise. Instead of employers cutting back, they actually added. They need more help. Today, Challenger Gray. So we were looking at first, they tell you what the corporate layoffs look like. They're half of what they were in November. I'm giving you an approximate number. I didn't expect to see that, and I don't think the market did. ADP number grew. Jumped rather dramatically. That was a surprise to the market. And unemployment claims actually fell 19,000. That's not what the Fed wants. The Fed wants to see fewer job offerings, actually, fewer people taking jobs, harder to get a job, and certainly seeing that the claim number is going up because the economy's slowing down. It is not what's happening. What's happening is the large companies, be it the Amazons, the Salesforces, they are letting people go. Picking them up are the mid-tier to the smaller companies. So people that want a job, they're leaving one. In many cases, they've been getting better pay. Those are why we got to watch tomorrow for the big boy. The big boy is the jobs report. It's the last one we're going to get in front of February 1st FOMC meeting. I have a theory. I can't jump fast enough as that silver bullet train is coming down the track to get out of the way just in time as that report comes out. What I like to do is step back, let the dust settle after the reports come out, then take a fresh look at the charts and take my action. It's exactly the game plan I'm going to go with. The dollar up sharply today. You took the metals down. Copper was up big time. And the reason it is China's making all this noise about throwing support at the property market and stimulating their economy from the COVID cases. I write tonight about an AP, Associated Press report, of people on the ground in Beijing hospitals and what they're seeing. And it's really tragic. I mean, this is really moving on. But the situation is such that China's going to let it go. It's going to get over the hump. For the lunar holiday, there are different parts of the country already asking people not to come from the bigger cities. Don't bring the COVID with you. Let us get through this. And we'll see who pays attention and what they do. When you look at the S&P on a weekly basis, you're down 0.60%, not even 2/3 of a percentage point. And where's the market sitting? Literally at the 18-day average of closes. We can see the sideways action that we're getting here. Is this a base, or is the market going to break through the bottom of this and start dropping away again? Obviously, you're going to have the naysayers no matter what the labor report says, but the reports that have come out so far are all strong, which leads me to think the jobs report should be strong. Do I know? I don't have the slightest idea. Comes out, I think, 7:30 in the morning, Central Time. We then go to the micro mini S&P with the swing lines. No trend. You have a higher high, lower low scenario. Number two, the market is under the 18-day average, which is under the green, the 100, which is under the 200. So the bearish trend in terms of bias is all set up in the market, and it's staying under that. Those are your resistance numbers. In terms of the Bollinger Band, if you drop hard tomorrow, look for the pros to do some covering wherever that Bollinger Band comes in. 3750 area is it right now. If the market pops hard, the first resistance should be the 3890 level. You can see that right here, up to the 39.25. If the market takes off from here, the question is how high can it go? Even regardless of everything, you're going to have a big resistance in the 40-30s. I'm not saying it's going there by any stretch, but you look at a chart and you say anything's possible. In terms of momentum, you had a bearish embedded reading. I just want to bring you to it. And this was the market. You take a look. You lost the reading. Watch this. You gain it back on the close on Thursday. Now, remember, tonight we're looking at Friday trade, and you're getting it right back. When you get those whipsaws, I stand back from the market. There's no point in trying to second guess what it's going to do with that. In the NASDAQ, you still have the bearish embedded reading. That rules the day when it's in place, which means the market on rallies until that number's over 21 probably gets sold as long as, I don't think the pros sell over the number 20. That's my instinct on it. I know what I teach. And any close over 21, you don't want to be short. Barring that, it's still bearish. You have an oversold condition that corrected to the 18-day average of closes in the past 72 hours, and now the market is sitting back under it, and everything's sort of just waiting. What is this report going to do? In the Russell, the same thing. You have an oversold market that's correcting but not trending. Higher highs, lower lows there. The VIX, here it goes. I was hoping it would come in. It's still not helping. It's not giving you any ideas. It has locked on to the 18-day average, and it's sitting there, and it's just spinning wheels. This is the way you lose, in my opinion, at least, money. You're trying to guess, is it going to go up, down? It doesn't follow through. It's a good place to not be involved. Then we get to the bond market. Now, look at the coming together of the 18 and the 100-day average. But you also got to understand, if you get a bearish crossover here, where this number starts closing under the 100, you get a bearish setup. Let me flip the other side because it can go either way. You get over 128.4, you close over both numbers, this number scoots, that turns back up, you have a bullish setup. Tomorrow's a super important day in this. The 10-year note's a bit more bearish. You know, that's the back end, the very back end of the curve yield. As you move forward, you got a lot more of a bear case. You already had the bearish crossover back here, and the market did make its drop off it. So now you're possibly going to go up and challenge those numbers to see what the market's made out of. In the dollar index, 4 days ago, you went to the lower Bollinger Band. Now you're back to the upper band. Everybody's had a chance at something, a very difficult market. I stay away from those. There's going to be so many opportunities coming up in the next week. What you don't want to do is get yourself where you're defending a position that goes against you and you can't take the trades that open up. That's why I stay away from these big reports. In the euro, down to the lower band. We talked that it might go there. It's there. It hit it today. It's oversold. I'll let somebody else want to own it against the Bollinger Band and oversold. I don't want to do that. And in the British pound, frankly, today it disgusts me. Why? Because just the other day I was telling traders to be short on this rally. And what did I end up doing? And I don't mind telling you this, okay? I had them going short against these numbers and ended up $60 profit, scratch trade in that neighborhood. Because I said, hey, this is just no good. You got a 21.49 reading. You lost the embedded reading. I follow my work. Then you come in, and today, after these 3 labor reports, bang, you go right down to the objective. You want to rip your hair out. It wasn't a loss. Missed an opportunity, but I didn't miss anything. The day I start breaking my own rules is the day I'm useless to you and certainly useless to myself. When we look at Bitcoin, you've now run out of momentum on the downside. That doesn't mean you're bullish. You've now gotten back to the neutral area in the market. You're hearing more and more firms having trouble. Gemini and others are there. Coinbase is paying a big fine. I mean, the fallout is still going on, but I think the worst is over. So now the question is, how does the market deal with that? But I think the bad shoes that have had to drop have dropped. Yeah, there'll be money that's dispersed from FTX and all that in time. I've seen how these things work. It could be 2 years. It could be a very long time. There's litigation. You haven't even begun the trial of that, gentlemen. And now you got to worry. Everybody, creditors are going to want their money. Investors are going to want their money back. Who gets priority? The courts don't move fast. I don't know that the U.S. has even gotten the money out of the Bahamas, $350 billion or something. It's crazy numbers. It's nuts how much money's out there in this stuff. Is it a million? I don't know. I pay no attention to it anymore. It's so insane. I think it's a million. When we look at Brent versus WTI, you can see how the market got over the 18-day average, back under it. And again, I thank the gentleman that wrote me on this. It's not a ratio. I like the spread difference, and that's what I like to plot. But what are both markets doing? Well, it's funny. Copper takes off because you're hearing that the Chinese government is going to help the property market, but oil doesn't move on the same type of news, which makes no sense. So you've got this divergence going back and forth. Is China's COVID cases bearish, or is China's props that it's going to put in place bullish for the whole economy? Then shouldn't the energies come back? Let the market do its thing. It got up 3 days ago to the upper bands. That's where the pros, in my opinion, came out. You weren't embedded. Same thing in the WTI. You could be challenging the lower bands now. You went in the heating oil to a combination of the 200-day and the 100. That's a big resistance area, big time. And the market came right back down from it. Okay, is it trending? It is not. You're void of a trend. You have higher highs, lower lows in the market. And natural gas just doesn't know how low is. But if you listened today, CNBC had a forum in Miami Beach, and all morning long they were talking to different energy people. It was wonderful. And Cheniere and some of the other companies were there talking. And, they're explaining to you that at this price that we think is depressed because it was just way up here, these guys are used to $2 and $3 natural gas. They're well above that, and a lot of them have hedges in up here where they are really well protected. To a man, though, they're saying that the U.S. needs infrastructure. We need to be with gas pipelines. We need oil pipelines. We've got to get with it. All right? This idea that we're going fully green, you got to blend that with your needs now so you don't become a servant of foreign powers that control your energy. We should become self-sufficient again. Do they think that we're going to become the world's powerhouse for LNG? You can't. You don't have enough ships and loading facilities to get them out. In the next 3 years, as I was listening, maybe we'll be able to do another tanker or tanker and a half a day of LNG. Well, that's not going to do the job. Russia was supplying the equivalent of 50 tankers a day via the landlines that they're no longer doing that. But thank God for Mother Nature. It is certainly helping Europe. As you know, the cold weather isn't as cold. I cracked up laughing when Putin said, let's call a truce for the Orthodox Christmas. He's bombing children, hospitals, and he suddenly is paying attention to Christmas. President Biden got it right. When asked about it in the conference this morning, he said, the man needs oxygen. That's what he's saying. In other words, time out. I think that's what he's saying. It's a rough time. All right, so that's where you are with it. Now, one of my favorite tools on a day like tomorrow is pivot points. Why? The market will likely go crazy after we get the jobs data. And with it, you're going to spike the market up and down. In those spikes, you get an area where first, today's range sets whatever the pivot's going to be. Then you trade within these pivots. The high and low of the day range sets up what the pivots are going to be for buy and sell points. And if you learn how to use them, you're looking for the extremities where the pros look at the neutral line, then sell lines above the market, buy lines below it. And what I do is I tie in the slow stochastics the way that I teach them and put it on top of it. Is tomorrow a day of fun for these type of systems? I got to tell you, it's what they're made out of. Every day on a major report, this type of system for the day traders comes into play. I have buddies that do this, and I talk to them and they go, yeah, I'm back to what we did and we learned 30 years ago. This is still around and it's still interesting. So I created a video series for you. It's not just written, it's all video. Shows you how I do it, what I would do with it, teaches it to you step by step, walk you through the whole thing, and it's free. So to get it, just go to our website under free offers or take your cursor, move it to the very top up here. And what do you do with that? Bingo. Click it, you'll be in the free offers, choose things you want. I'm Ira Epstein. Buckle in for tomorrow morning, and I'll see you tomorrow. And for my subscribers, you'll see me at 9 o'clock. If you're the Spider ETF people, I'll be all over the markets. Take care.